Hey there, everybody. Allison here, and in this video, we are going to talk about LUMN. Now, this is a trade idea that I am eyeing for a few different reasons. To start off with, we have a nice squeeze that's been setting up, a recent ideal squeeze. Momentum's had a good reset. We're trying to print a bullish signal on the compound breakout tool today, so we'll see whether or not that remains valid. And when we look at the top chart, we're in an overall bullish trend. Bollinger Bands are starting to open up. And on a weekly time frame, we have a weekly bullish divergent bar with a target of 1129 by the end of next week. And as you can see, we also have a weekly squeeze that's been setting up, still a low compression one. Overall bullish sentiment here, room to move higher on momentum, and recent true low signals. So there are two different ways I would consider playing this. The first one is to go for the shorter time frame target of the divergent bar and look for a move back up to or above 1129 by the end of next week. If we go out to next week's expiration, the 1050 strike, for example, is only about 37 cents on the mark, relatively inexpensive. If we hit our target of 1129, this will be 79 cents in the money. So from a risk versus reward perspective, not too bad. You could, of course, reduce your risk even more by doing a spread, or if you don't mind a higher capital cost and you want a better delta, right, a bigger bang for your buck on the move, you could always come in the money and do something like the $9 call at $1.27. So that way, if it moves up an additional $1.29, right, you could still take a very nice profit on this for the risk versus reward from that standpoint. All depends on the capital risk and what makes sense for you and your account. If you like this idea from a longer term perspective, though, based off of the true low discount buy, your best friend with true lows is time. And so from that perspective, because this is on a weekly chart, I would just consider buying in some shares, right? As long as you are within your risk tolerance, you have a line in the sand for where you don't want to see that level break and you protect capital at that point. Shares are a great way to bypass any sort of theta decay and sit for a bigger hold to the upside. For example, the last time that we had a strong print of true lows back here, we went from about 350 up into around 1150. So very nice point move higher. We'll see if we can get a similar move to occur off the recent true lows that we had print back in April. But that is my time, guys. Thanks so much for joining me. As always, may the trade be with you, my fellow Jedis. And I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.